Federal Reserve Chair Jerome Powell announced on Sunday, January 11, 2026, that the Justice Department has initiated a criminal investigation into his congressional testimony from June 2025. The probe centers on his statements regarding the Federal Reserve's multi-billion-dollar renovation project. Powell, in a video address, characterized this unprecedented action as a politically motivated attempt by the Trump administration to compromise the central bank's independence and coerce it into more aggressive interest rate cuts. This development immediately triggered significant concerns across financial markets, with stock futures experiencing declines as investors grappled with the implications for monetary policy stability. The Dow Jones Industrial Average, S&P 500, and Nasdaq Composite all saw futures fall in early trading on Monday, January 12, 2026, reflecting widespread unease over the potential erosion of the Federal Reserve's autonomy. The investigation marks a critical escalation in the long-standing tension between the White House and the Fed, raising fundamental questions about the future of independent economic policymaking in the United States. The criminal investigation specifically targets Powell's testimony before the Senate Banking Committee last June, focusing on the Federal Reserve's $2.5 billion renovation of two office buildings. This project's cost had escalated from an initial $1.9 billion, attributed to factors such as material price fluctuations, design changes, and unforeseen conditions like asbestos removal. Federal Housing Finance Agency Director Bill Pulte has been identified as a key instigator behind the subpoena, alleging that Powell provided misleading information about the renovation's details during his testimony. Powell, however, vehemently denies these allegations, asserting that the focus on the renovation is merely a pretext to mask the administration's true objective: to influence the Fed's interest rate decisions. He stated that the threat of criminal charges is a direct consequence of the Federal Reserve's commitment to setting interest rates based on economic evidence, rather than succumbing to political preferences. The Justice Department's probe has ignited a fierce political backlash, particularly from within the Republican Party. Senator Thom Tillis of North Carolina, a member of the Senate Banking Committee, strongly condemned the investigation, labeling it an attack on the Federal Reserve's independence. Tillis publicly vowed to oppose any of President Trump's nominees for the Fed, including a new chair, until the legal matter is fully resolved. This stance creates a significant hurdle for the administration, as Powell's term as chair is set to expire in May 2026, though he can remain a governor until January 2028. President Trump, while denying prior knowledge of the DOJ investigation, has consistently criticized Powell's performance and the Fed's interest rate policies, previously calling for his removal and even suggesting a gross incompetence lawsuit. The situation highlights the delicate balance of power and the legal protections designed to ensure the Fed's ability to conduct monetary policy free from political interference. This political confrontation unfolds against a backdrop of recent Federal Reserve monetary policy adjustments. In the latter half of 2025, the Federal Open Market Committee, FOMC, implemented 3 consecutive 25 basis point interest rate cuts, bringing the federal funds rate to a target range of 3.5% to 3.75%. These cuts, occurring in September, October, and December, were largely a response to signs of a cooling labor market. However, the decisions were not unanimous, with dissenting votes reflecting internal divisions over the appropriate path for monetary policy, particularly given persistent inflation above the Fed's 2% target. As of January 2026, the outlook suggests the Fed is likely to maintain its current rate at the upcoming January 28 FOMC meeting, with analysts anticipating only 1 or 2 additional cuts throughout the remainder of 2026. This cautious approach underscores the Fed's commitment to its dual mandate of price stability and maximum employment, even amidst external pressures. The financial markets reacted swiftly to the news of the criminal probe. On Monday, January 12, 2026, U.S. stock futures for the S&P 500, Nasdaq 100, and Dow Jones Industrial Average all registered declines in early trading, signaling investor apprehension. The S&P 500 ultimately closed down 0.07% at 6,961.16, while the Dow Jones Industrial Average fell 0.53% to 49,240.00. Conversely, safe haven assets saw significant gains. Gold prices surged to a record high of $4,640 an ounce, and silver futures also climbed. The US dollar index weakened, falling 0.3% to 98.88, and the 10-year Treasury yield ticked higher to 4.19%. These movements reflect investor concerns that the unprecedented investigation could undermine the Federal Reserve's institutional independence, a cornerstone of stable financial markets. Analysts warn that if markets perceive monetary policy as being influenced by political intimidation rather than economic fundamentals, it could lead to increased volatility and impact borrowing costs across the economy.